All right, Tyler Crow, we're going to talk about Starbucks. Just reported results that were bad. Revenue was down, traffic was down, and basically all their major markets, profits got hit hard. Again, revenue was down, even though they had 6% more stores open than they did a year ago. So we got a lot to talk about. Dig in. Is this an opportunity to buy? The stock's down more than 30% over the past 6 months or so. Maybe even just this year, it's down over 30%. You ready to dig into this and come to a conclusion about where we stand on Starbucks?
You know, I'm going to hammer home one point in this entire video, and I promise you it's not any numbers.
Yeah, there's a lot more than numbers behind the story right now. The numbers are the numbers, but it's everything that's happening in the background that's really affecting the business results. I'm Jason Hall. This is Investing Unscripted. This video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, you need to go to our special link. As you see it right there on the screen, it's fool.com/unscripted. Again, fool.com/unscripted. Go to that link. The Motley Fool, it's got a great offer for you. They're going to give you their 10 best stocks to buy right now for free just by checking the offer out. So go check that out after this video. Okay, Tyler, I'm going to bring up on the screen. This is the year to date. This is the stock result for Starbucks. It's been a pretty decent year for the market, not for Starbucks. Stock's down 25% year to date. We look back over the past year, it's down a lot more. It's down 33% from the high. Going back to that year to date result, it's probably pretty easy to see when the company reported earnings. So what happened?
I'm going to go to the CEO's comments. Did an interview with CNBC, and one of the things that he commented on the most with and trying to translate McKinsey speak into something that I think we can all kind of understand here was basically what he called the occasional or the marginal customer, somebody who isn't exactly the most loyal Starbucks customers. They weren't as effective at capturing that particular customer. And that was kind of the thing that they kind of hung their hat on the lack of sales. He mentioned loyalty customers were still a strong unit, but they thought that their weakness was mostly related to that, as well as, some geographical issues, notably China. That was the gist that I got from the interview, and I think the numbers that you have will back that up.
Yeah, $8.6 billion in revenue. That was down 1%, even though 6% more stores open than there were a year ago. As a result of those basically flat revenues with a bigger store base, which means, Tyler, higher expenses, earnings fell, operating margin fell 140 basis points, earnings per share, and this is the adjusted number too. This isn't even the GAAP number, fell about 7%. The traffic was the big thing. So comps, this measures revenues at Starbucks stores that have been open at least a year or more. So you're backing those newest stores out of the number. This is a good measure of organic growth. Fell 4% globally. North America, this is the biggest market. This is the most profitable market. It was down 3%. Internationally, it was down 6% and 11% down in China. This is really important because in China is kind of viewed as the company's most important growth market. 500 million middle-class consumers in China, and that's a number that's still growing. The expectation is that China over the next decade is going to surpass the US and become the largest, most profitable market for the business. And that number was, part of the business was down a lot. They gave us a little bit more color in those comps that I think is really important. So in North America and the US, 7% decline in transactions. So prices were up, 4% increase in the average ticket. Again, a lot of that is just higher prices, 7% decline in traffic, basically. Looking at China, 8% decline in prices, 4% decline in transactions. So you're seeing less people come in, right? That's really important. So that does back up the CEO's story about traffic, whether specifically it is the marginal customers he was calling out and not so much their most loyal customers, those regular repeating customers. Probably true. It probably is true. But let's back things up a little bit. This was their second quarter, fiscal quarter. Their first quarter was great. I think comps were like 10%. It was a great quarter, record earnings, record revenues for that period. Numbers were down. What do you think? What are your observations? What are your concerns? Can the company kind of go back to the growth magic we've seen for so many years?
Well, I'll play both sides just for a minute. I think it's a fair assessment to say that US customers may be a little anxious lately. We're starting to see that in consumer spending reports and things like that. GDP numbers are kind of running out of steam compared to what we've seen in recent quarters of job reports. So maybe there's a little bit of economic anxiety. And so we can kind of chalk up a lack, at least in the US, to that. And, on the Chinese side, like you said, is a major growth engine. Chinese economy hasn't exactly been, shooting the lights out in recent years. We've seen issues with collapse of some of the real estate companies and slow growth kind of it's been fits and starts coming out of the pandemic.
One
Hey,
other thing about the Chinese story that's important too is that we're starting to lap the reopening, right? So last year, the Chinese economy really fully reopened, huge bounce back results for Starbucks that year. So maybe there is a little bit of fatigue there too from the Chinese consumer as well.
yeah, so that's the good side of it. And this is where to me, and this is I would say if I were to kind of poke at the deeper issue that I see with Starbucks and why I have contention with what may be happening with this company. This is the third time Howard Schultz has had to he was in, he was out, in, out, in, and this is the
Right.
third time
Well,
out
this is
with
the third CEO that has replaced Howard Schultz as CEO.
yeah, so we're on the performance here of, Schultz coming in, trying to fix things or repair things or come in after retirement and then try to hand it off to somebody else. And it's been about a year under current CEO. And this is a business that I think how in Howard Schultz's vision of what it was for a long time was kind of this third space and trying to take something that is I mean, yes, it's a large sprawling business today, but it's a pretty simple business. It's a strong brand that has worked for a long time and should be a relatively simple business model. And yet, this is the third CEO, and it doesn't appear that he seems to have a pulse of the business or how to effectively communicate that message to the business. Like I said, you know, kind of blaming it on the marginal customer, which maybe, but maybe the marginal customer that is making a choice to go elsewhere with their business because they don't see the value proposition with what they have at Starbucks today. Just a thought. And at the same time, it was a very, I would call it an unsatisfying sort of result from the CEO, at least through this interview. And it kind of gave me this impression that there may be some deeper cultural issues at Starbucks. Current CEO, he was like a 20-year McKinsey consultant that came in after he worked for Pepsi Cola. This isn't like somebody who was, forged in the fires of working as a barista at Starbucks and kind of worked his way up through management and all the things like that. And I feel like with a business that is so centered around the customer, so idea of working on the brand, there should be that some sort of corporate culture involved with this business that makes all of its employees feel like there's some sort of orient towards the business and towards the culture. And when you're bringing in outsiders all the time to try to fix this, and it just doesn't seem to work. Like I said, this is the third time Schultz has passed it off. And then after this most recent quarter, Schultz is like posting on LinkedIn on what the guy needs to do.
It's worth mentioning too that Schultz actually stepped away from the company completely last year, stepped down from the board. So besides being a large shareholder of the company and essentially the founder of the business, even though he bought it, he didn't actually found it. I want to second your concerns about management as well. So again, the Schultz history, you go back to the 2000s, Orrin Smith and then Jim Donald replaced Orrin Smith as CEO in the 2000s. And Schultz had to step back in, came out of retirement and became CEO. He was replaced by Kevin Johnson in 2018. Kevin Johnson was a wonderful CEO. Johnson came in to the board of the company, was on the board for a couple years, and has a technology background, which actually was great because it was the time the company really needed to focus on the digital flywheel, building the mobile app, mobile order and pay, start moving away from paper orders to digital make ready and the back for those processing those digital orders. So he was really important. And it seemed like he actually kind of got the idea of making the restaurants as efficient as possible, but also making them as welcoming and friendly as possible too. Really focusing on like that core. Let's treat our customers great. Let's get them the orders very quickly, and let's have really great products. And his run through 2022 was good, but then he retired. Roz Brewer was the president of the company and a member of the board up until about a year before Johnson retired. She left to go to Walgreens. Of course, that didn't go well at Walgreens. She was not successful there and she ended up stepping down. But it seems like the company has failed to have any sort of succession planning and leadership development within its executive suite. And that starts at the board. Let's be honest. That starts at the board and then filters down through the executive suite. And it just feels like to me that a big as important as his legacy is a wonderful business. Schultz's legacy is a wonderful business. But if there's one black mark on his legacy, it's their failure to develop executives to lead the business from the big chair, right?
Some of the best businesses and the ones that have been the best performers over the time have been companies that develop these corporate cultures where everyone is aligned and everyone, like, you can see the training and development kind of embedded in how the company works because there's an acknowledgement that, everyone's going to move up and everyone's going to eventually move on. And so executive leadership training, bringing people up. I love this example, and it's wholly unrelated here, but there's a wonderful freight forwarding company called Expeditors International Washington. Their current CEO started as a page in 1984. It's just like rising up through the ranks sort of thing. And it kind of shows the corporate cultures that have been immensely successful. And with Starbucks, there's just this weird thing where you feel like there should be this deep bench of talent. I mean, they have 50 vice presidents. How do you have 50 vice presidents and not have a deep bench of talent ready to step up into a major role? And things like
Yeah.
that it just makes you wonder, like, what is the future of this business when Howard Schultz can't come back and actually try to fix things again?
Yeah, let's wrap this up, Tyler. We've gone about long enough. You go first, and then I'll give my final thoughts. Where do you think about Starbucks as being an investable business?
It's an incredible brand. It has pricing power. It still has a lot of opportunity to grow. I would like to see just some sort of sign that management has a better pulse. This current iteration of management has a better pulse and isn't going to consistently have, Howard Schultz kind of stirring the pot from the outside and trying to, make things different. I don't, that is just not a recipe for success for this company long term.
Yeah, so I think the stock could be cheap right now, and my bias after earnings, going through the results, having followed this company for about 15 years at this point, Tyler, seeing them go through these periods where results get weak, traffic gets soft, but then customers come back, they continue to develop and get better and deliver great product and a great service, and the results end up shining. I want to give Narisaman a little bit of credit here. Yeah, he spent a lot of time as a consultant. We love to beat up on consultants here on Investing Unscripted. He has worked with some very big consumer brands directly. He's also tried to steep himself in the business. He spent a lot of time working shifts in the restaurants, right? And I think there's some value in that. As long as he continues to do that, he's also taken over through a really tough time for the business in terms of the challenges between labor and management, right? Starbucks now has several unionized stores. More stores are moving forward trying to become unionized. So that's a tough balancing act that he has. And I think he does deserve a little more time because of the cyclical challenges you talked about with the US economy and consumers maybe starting to feel the pinch and maybe pulling back on those discretionary expenses a little bit. From that same perspective, I'm not ready to add to my position. I'm not selling either. It's such a wonderful brand. Everything you talked about, pricing power, they also have cost advantages. The largest coffee buyer in the world, they have a lot of advantages that are built in. They're very well run. They do have an operationally minded executive team that is pretty good as long as they don't screw it up. I think the big thing I'm focused on with them right now is I don't want to see them over leverage or overreact. I want to see them just not screw it up. So I plan to follow the company as closely as I always have for the next several quarters. Watch the results, see how the consumer is doing. Think about that backdrop with the consumer, and also see if management is just really doubling down on focusing on the things they do really well, or if they're overreacting. And most importantly, if the board is giving the CEO time and the support to navigate the business through this tricky time. It's a wonderful business. I think investors just should be patient, but again, let the business dictate that it's earning your investment and not chase the stock lower just because you think that it's going to eventually go higher.